Hello friends, Chris Lee CPA here, back with another video for you. And today we are going to talk about how we can claim charitable gifts as business expenses rather than a charitable donation deduction. So under current tax law, we, with the One Big Beautiful Bill Act passed in July of 2025, we are now in a position where we are going to continue seeing higher standard deductions, which means that it makes it more difficult for people to claim benefits related to their charitable giving. And so for 2026, individuals with a standard deduction for single taxpayers is going to be 16,100, and then it's around 32,000 for married filing jointly. And so that makes it more challenging for people to claim itemized deductions, which is where you get the benefit for your charitable deduction. So naturally, if you're a business owner and you might not itemize your deductions, the question might become, okay, well, how do I maybe get this as something other than a charitable contribution deduction? And so that's what we're going to explore today, is transforming or thinking differently a little bit about your charitable giving. And so and if it could be claimed as a business deduction rather than a charitable giving deduction. So when it comes to this, the IRS distinguishes between charitable contributions and business expenses by the gratuitous intent. So when we're looking at a charitable contribution, we think of it as a voluntary transfer that doesn't have any expectation of economic benefit or substantial financial benefit in return, right? Like we're not expecting really anything in return. But if we take that and contrast that with thinking about a payment to a charitable organization as having some sort of direct relationship to the taxpayer's trade or business, and it has some sort of expectation that there's going to be some sort of return on that payment, then all of a sudden we might be able to think of it as a business deduction. And so the way we can do that is if we make a payment and we're expecting some amount of substantial benefits beyond those flowing to the general public of the organization, it might not be a charitable contribution deduction. And so when a payment to a charitable organization qualifies as say advertising or promotion, we go ahead and take that deduction as a business expense. It's not a charitable expense, it's a business expense. And so we bypass the restrictions of the itemized deductions and those sorts of things. And so and then it also helps actually manage down certain limitations that could apply in determining other deductions and items. So when it comes to doing this, we need to make sure that our payments are going to bear some sort of direct relationship to the business, and that there's some sort of reasonable expectation of a financial return. So the easiest way to think about this is advertising, right? So there are several cases out there that kind of explore this concept. A popular one involved a trucking company that contributed cash to a hospital because he wanted to impress the chairman of the fundraising drive, who was a potential customer. So the court allowed a deduction as a business expense because the taxpayer had a reasonable expectation of a commensurate return. So the idea here is that a business can sponsor a charity fundraiser, pay for the venue, food, or printed materials to make a clear and make clear during the event that they are promoting their products or services to the attendees. If the event is structured as that sort of promotional activity, those costs can qualify as a business expense. Other ways that you can do this is you can use sort of like a rebate approach. So this is where we've got a case that exemplifies this, is where a travel agent made payments to charities that generated substantial travel business for her in return. And so she treated the payments as a substitute for sales calls. calls her competitors used to obtain businesses, and the court allowed her to make deductions. So she basically made payments to charities that in return generated a, some sort of rebate to her. And so basically the decision turned the business, the payments to be from charitable to business. The amounts were, that she paid to the charity were tied to expected and actual business. And so that was what made it distinct from a charitable or gratuitous purpose. Another way people have done this is using, kind of a coupon system. So we've got some amount of case law that kind of gives us an idea here is that a corporation can, attach coupons to its product, stating that when a customer buys a product and submits that coupon to a listed charity, the business would make a payment to that charity. So the IRS ruled that the payments made to redeem those coupons were deductible as business expenses. So to just strengthen the deduction, the business would write checks directly to the charities from, the business account, and a separate business account is, important just in general for making sure your business looks legitimate, which, I mean, that's how I advise most of my clients. If I find out a client is like using a personal account, that's like we're going to start talking about coming into question of like whether or not you actually have a business or if it's a hobby. So you can also do it another way where you like tie the payment to sales. So this is where you tell customers that a business will donate a portion of sales proceeds to charity. This, can stimulate demand by giving customers, an additional reason to buy from the business. So the IRS has approved a comparable arrangement and treated the payments as business expenses rather than charitable contributions. So that's kind of another idea to think creatively about this. So the most important thing when thinking about this is that you need to have overt records and keep good records. So if you've got weak records, it won't be substantiated. So there are cases here where that if you don't maintain good enough proof of record of sponsorship agreements, promotional materials, referral tracking, all that sort of stuff, that it will not hold up as a business deduction. If looked at closely, it will move to a charitable contribution deduction and then subject to whatever limitations apply. So keep that in mind as you're going through the rest of the tax year, and that we don't always have to think of these payments as strictly charitable, and that we might be able to bypass some of the restrictions that might otherwise keep us from obtaining benefits. So if you're making payment to a church, school, charity, and it's directly related to the business and made with some amount of reasonable expectation of economic benefit, then you're gonna be able to deduct it as advertising or promotional expense. So just keep that in mind as you go throughout the year. And if you have any tax questions as you're running your business or as you're doing something like net worth planning or estate tax planning, estate planning in general, managing your investment accounts, you click the link down in the description and we can have a call and chat soon. So take care. New video for you soon. Bye-bye.